All right, testing. 1, 2, 3, testing. 1, 2, 3. The rain in Spain falls mainly on the plains. The ancient France de mainly in your pants. Comment allez-vous? How are you? Welcome to Forex.Today, the YouTube community of almost 20,000 foreign exchange traders. We're stationed around the world. We're watching the clock 24/7. We have boots on the ground in almost every country. And that gives us an edge if we work together as a community. We gather here for technical and fundamental analysis with the overriding goal of putting together trade plans here in the New York trading session. If you're trading along with me using a demo account, then regardless of whether your plans are successful or not, you will have an opportunity to learn. My name is Wayne McDonald. I'm a currency trader just like you, and I will be your guide on this journey we call Forex. Just ask questions, and I will do my best to help. If you need more resources, all the links are in the description below. 65 hours of Forex training videos, including technical analysis, fundamental analysis, central banking, monetary policy. It's all there. $88 for a year access. If you need a book, the link is in the description below. I wrote a book many years ago, still valid today, called Strategic and Tactical Forex Trading. The link is in the description below. And if you need a foreign exchange broker that is trustworthy and actually enters your trades into the interbanking system, I recommend tradersway.com. They earn my loyalty and respect. I think it was about 8 or 9 years ago. Could be 7 or 8 years ago. While ago, they earned my loyalty and respect, not because they had a banner ad or a YouTube video ad or a Google link. No, they were unharmed by the Swiss National Bank debacle that put other brokers out of business overnight. Some brokers lost hundreds of millions of dollars overnight because of the Swiss National Bank. Put them out of business. Sorry. Anyways, those actions to me earned my loyalty and respect because the way I translated that is Traders Way actually enters your trades into the interbanking system like you liked, and they're not trading against you. I'm like, holy snap. So are those other brokers trading against their clients? I don't know. That's for you to decide. But that's how I read that. And they earned my loyalty and respect through their business model, their ethics, and their actions. So if you open up a demo account, maybe they can earn your loyalty and respect too. And then you have a trustworthy, ethical execution partner for your Forex trading business. Tradersway.com. What's up, Brinsley? Cool. So, what's going on? We got this thing called Trade Balance coming out today here in America. You probably traded the Japanese trade balance last night if you trade the Asian session. Yens were super weak for a while and then they weren't. That's how it goes. But before I take a look at the currency poll or the members poll, let's talk about trade balance. Okay, this is imports minus exports. Wait. Maybe it's exports minus imports. X minus M, sorry. Okay, so what this tells us, well, I mean, let's start at the basics. Let's back up here again. Okay, nominal GDP is Y. Why? I don't know why. Stop asking questions. All right, nominal GDP is consumption plus investment plus government spending plus exports minus imports. So we're talking about X minus M. And the reason this is important to currency traders is we're exporting stuff, what do we get in exchange for exporting products and services? What do we get if we send a car or an accounting service to a foreigner? What do we get in exchange? Since we're foreign exchange traders, what do we get in exchange for product or service? This is me waiting for you to answer. Money. Yeah, money. In particular, our money. US dollars. So stuff goes out. Okay? Dollar comes in. So the foreigners had to go to the foreign exchange market, exchange their currency. So let's say it's a German company. Okay? So Germans have euro. So they go to the interbanking system now. We'll call this IBS, interbanking system. They go there to buy dollars. So they're selling euros to buy dollars, to buy stuff, which then goes to Germany. You see that? So dollar would get strong. Now imagine countries all over the world doing business with America. They have to go to the interbanking system and demand dollars. Therefore, the value of the dollar goes up. Okay? Now, the thing is, we import more than we export. So this is dollar up, let's say. Okay, so if we import, what happens? America goes with their US dollars to the interbanking system and buys what? Japanese yen, so that we can buy a Toyota. And therefore, the Toyota gets shipped to America. So when you buy a Toyota, now I know Toyotas are made in America. Just calm down, okay? What we're doing when you shop at Walmart, how about that? Because nothing in Walmart is made in America. So you are selling your dollar to buy some other currency, to buy your cheap t-shirt. Okay? You get that? So when you're importing, you're selling the dollar. And when you sell the dollar, it weakens. So here's what I'm getting at. Here's the logic. Okay, here, let's go Newtonian here. Which one is bigger, exports or imports? Do we export more or do we import more? And by we, I mean America. Does America import more or export more? Okay, so X is less than M. So we sell more dollars. You see? We sell more dollars than dollars are demanded. Bulls and bears. I want you to think of it this way. It's exports minus imports, but you could restate it and say dollar bulls minus dollar bears. Let's do it in a different color. Dollar bears. You following me? So therefore, there are more dollar bears. Okay, I'm just being factual. What's up, Stevie? Okay, that's what this number means. Okay, this is what this number means. So the bigger the negative number, the more dollar bears there are. It's literally a measure of bulls versus bears, because this is net. Okay? Exports minus imports. And does that mean dollar weakness? Yeah. Yeah, it does. Okay? What happened here? COVID. So what usually happens? Okay? What usually happens is when times are good, or at least say normal. When times are normal, the dollar is weak. You're like, how do you get to that opinion, Wayne? Look at it. It's not my opinion, it's my conclusion. Do you understand that? That's what this number means. Now, the United States is a huge country, blessed with almost unlimited natural resources. So it exports a lot on absolute terms. But the amazing thing is it imports even more, mostly because foreign workers are cheaper. So it just makes sense. One of the things I cover in the macroeconomics course is the idea of specialization. Should you make radios and bicycles, or should you specialize in just radios and have someone else make bicycles? Well, the interesting thing is through economy of scale and specialization and the laws of efficiency, if two countries each specialize in something different, they both get more radios and bicycles than if they tried to do both themselves. And so I prove that mathematically for you guys in the macroeconomics course. Wink, wink, nudge, nudge. All right, let's see what's on your mind. Okay, currencies. Not very much crypto, not very much commodities. Some people, a little of everything. That always fascinates me. That fascinates me. Okay, to me, all of it is a form of money. Now, and I say that loosely with cryptos, and same thing with oil, right? You're like, wait, you can't go shopping with a barrel of oil. I gotcha. But they all lead to money flow. So right? So anyways, I'm interested. I'm interested in the fact that you're not interested. Interesting, right? Yes, that's right, Adam. Comparative advantage, for sure. It's one of the things you first study in, I would say, sort of a principles of economics. And I think they even do it as micro, which is interesting. But no, wait, you have to do a principles of economics, right? And then your next class is microeconomics, and then your next class is macroeconomics. So yeah, I guess you'd probably learn it in your principles class. Okay. So for example, let's do a quick example. You have the USA where wages are high, relative, because they're rich. Then you had China where wages were low. Okay. And we'll call this 1995. Oops, 1995. Okay. So the United States bought a lot of stuff from China, and China sent a lot of stuff to the United States. Okay? How about this? 2015. What happened? Okay? Inflation low. Okay, standard of living, if you want. High. Like something like the average household income was up 400% in that time period in China. So their standard of living was higher. They didn't live in farms. They lived in cities. They had better diets. They ate more protein. They ate more often. More people had cars. Something like, if you go back to the 60s, I think something like 75% of China was living below the poverty line. And by 2015, it was 1%. Like from 70 to 1. Thank you, capitalism, by the way. Thank you, free markets, by the way. Thank you, global trade, by the way. Okay, why was inflation low all that period? Well, because China specialized in manufacturing, Americans could buy stuff for cheaper and cheaper and cheaper and cheaper. Okay. Okay. Cool, right? So that's what happens. That's it. I'm done. No more fundies. Water. By the way, 2/3 of the world's fresh drinking water is in Canada. I think that's going to be a big deal one day. Yeah, Milo says it could be because we have smaller accounts, so oil and gold have minimum pip value higher. Yeah. I get you. I got you, Milos. Could be. But you should still watch it. So let's start with commodities, and then we'll go back into the currencies. But again, let's try to look at why first. Okay. So over the last several days, I've been prognosticating that oil was going to come down. And that we have news on Thursday that could even bring down oil more. Not based on the news, but based on behavioral guesses of how like the White House would respond. Nonetheless, I've been setting this up to be more down than up. This is us in the day trading group trapping. Here's a top. Here's a low. Lower high. Okay, now we got rangy. Uh-oh. Okay, lower high again. Okay, getting tighter range. Okay, check this out. Trap it, break it, retrace it, gone. And now we're way down here. We've dropped now from 93.5 to 89.5. That's legit, man. Too legit to quit. Too legit. Yeah. So that's kind of interesting, huh? Okay. So all the trapping is produced quite well. And and there's some logic here to dollar strength, which again was part of, this was predicted at the very, 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 very beginning of February. And then by non-farm payrolls, I suspected that the dollar weakness had fulfilled its destiny and maybe some dollar strength creep back in. So that's all part of this. Very interesting. So here we is. So yeah, so what's the outcome of that? Maybe Norway down? Okay. Maybe CAD down? Maybe. But that's the thought process. Now, I discussed with the day trading group and maybe even the swing trading group, I can't remember what day it was, on what behavioral I was talking about in regards to oil prices being high. And in particular, if we get, and most likely we will, another big CPI on Thursday. And how the high CPI will lead the White House to react. And I gave some guesses on what they would do. Nonetheless, the White House would bring oil prices down. Now, I missed something. Okay? What created this gap, this drop? Why that big of a drop? Why did it drop so fast? What did I miss? What could the White House do to lower prices of oil? I talked about a few, but I missed one, and this is the one that is likely happening. What happened in the last 12 hours to make that happen? By the way, it wasn't technical. Type in a question mark if you don't know or you don't have a guess. If you have a guess, throw down a guess. I want to see how much you're paying attention to international political economics. Yeah, and that's actual study. You can get a degree in this, by the way. Not Russia. Nope. Yes, TA Global nailed it. The Biden administration will probably let the Iranians pump oil and sell it internationally. Biden's going to cut a deal with Iran. Okay. Okay, now, so there you go. That's it. So, is it enough? I don't know if it's enough, but it's something. Okay. Of course they don't like it. Is that bad? Well, let's just say the United States and Iran are adversaries. I'm not here to say right or wrong, but Biden is willing to sleep with the enemy to try to save his presidency. And some would say that in of itself is a big mistake. Darko said, yeah, said that on Monday. Yeah, and today's Tuesday, right? I think it's Tuesday, isn't it? Yeah, so yeah. And then it fell. I just want to make sure people are paying attention, like you're paying attention to these things, right? So anyways, yeah. So let's take a look. So I was whining like a little baby, and I'm being kind because I want to use clean language. I didn't short here because I thought oil would fall and the Canadian dollar would be weak. And so last night we were here, and I'm whining like, oh, I just missed it. I guess I didn't do it. I thought the Canadian dollar would weaken. I thought oil would come down. Wah, 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 wah. Oh, good. I'm right again. Good. Good for me. So anyways, yeah. Okay. So that's that. Good look at Norway. And Norway just got held up. Okay. MM2 could go up a lot from here if dollar remains strong. Mohammed says, but that confirms more of my seasonality. Yeah, that's right. For sure. Yes, isn't that awesome, Norris? So when you're wrong, you're right. Yeah. Yeah. That's a slippery slope, huh? All right. So let's go here. Last night in the day trading group, I lined this up. My shorta. My shorta. Okay, cool, huh? Cool beans. The next one is down, up, sell it. Okay. I'm playing it here, but you can play it there and you just change the price a little bit. Cool. So for those bears, very clear roll reversal. Cool. Here's the crazy logic, eh? For sure. You're welcome. So you're going to join the day trading group or what? We're waiting for you. Take a look at euro dollar. I wimped out on this one, and right now I'm regretting it. I talked myself out of it because it took so long. I sat in here for a long time. Okay. And I bailed on it. And I thought about it. It was kind of a mistake. Right. So anyways, I sold the double top. And then it just sat here for, a day and just did nothing. But my plan was to bring this down. Okay. And I wasn't sure if everyone was on the clue train because I rallied this up. So I bought literally right here and I exited, I think it was here, right? And I thought, well, maybe not everybody's on this clue train yet, right? Maybe they're not. I don't know. I wimped out. I don't like waiting that long. So I have to see if I can find the strength to get back in. Okay. Nice. And I have a time-based target on this. I'd probably, I'll leave that later. The entry is much more interesting. So this should pop it up, is what I'm thinking here. Pop it up and then drop it down to the 55, up and then down. What do you think? Smell like a plan? Cool. So what do you guys think? Am I doing all right? Would you click the thumbs up button, please? Okay. Let's just pick a random one. I'll pick Aussie. Okay. Can you see this one? Yeah. I shorted at 71 with a 33 pip stop. And it went right here. Took me out for a loss. And then dropped. Yeah, well, whatever. I don't know. Yeah, you gotta, I don't know. Yeah. Yeah, well, yeah, I don't know. One of those days. So to relive the week, we started, I think it was here. I threw down a limit order at 71. So where's 71? So maybe that wasn't it. Hang on. Yeah, I guess so. Yeah, 15-minute chart. Yeah, so I guess we opened the week low. I threw down the order. Wait, that's not it. 15-minute chart. I don't spend a lot of time on 15-minute charts. So where did we start the week? Anyway, so I bought it low. I sold it low. I have to go all the way back, right? Yeah, okay, there we are. And I threw down the limit order here. So I started here. I let it come back, 30, 40 pips. Great. You can see my trade plan was down. And it came up and it was close. And then whatever. So I guess I was taken out here. So whatever. I tried. So now the thing is, are we starting this? Okay. Okay. Big drop, lower high. Now what? If we can get a lower low, now we're game on for lower high, lower low, lower high, lower low. Okay. Cool. Well, I can't be doing that good. 50% of viewers right now have clicked the thumbs up button. So the other half, So anyways, and then Noki we have coming, going up. I think we covered Norway because of Brent. Kitty Cad, we covered that because of WTI. Okay, great. Cool. Aussie heading up, which is kind of interesting in the moment. Let's take a look. Let's go back and do Bitcoin. Okay. And that's where we are now. I left my limit order there. Let me delete that. So one of the things we talked about last night in the day trading group is having it come down so we can buy it. That's why we're on a 5-minute chart and limit order and stuff. So I had a limit order just about here, but it wasn't it was just part of the conversation with the day trading group last night. Okay. You can see this is way overbought statistically speaking. I guess you'd have to go back into here, and even then it's way overbought. So no matter how you're measuring this, it's overbought, needs to come down. Let me change the template a little bit. Okay. And we're in the buy zone. We're in the buy zone. There's some short-term concerns as it's done something like that. So very often you have to be aware of this because it could lead to that. Now, on a 15-minute chart, it could come down for a day or two and then go all the way back up, right? But what was it? A month ago, I had this written on the screen. Do you remember? 3,333. It recently was at, even just last night, it was at 44,444. And probably on our way to 99,999. Cool. But this says, hey man, take a breather. Okay. That was a nice move. Very good. Needs to take a breather. Little correction here. What would Elliott Wave do? Okay. And then zip it back around. Yeah. Good morning, RL. One, two, three, four, five. I don't know. I don't know how to count waves. Maybe not on that time frame. Yep. Forex Pivot says some say Bitcoin will go to 1 million. Uh-huh. Yeah. Some say the world's going to end at the conclusion of the Mayan calendar. Remember that? But whatever. Yeah. Johnny's like, hey, so would this come back? Yeah, I would treat it the same, whether it happens or not. Like, I think what you're asking, Johnny, is is crypto different? Well, that's not the issue. The issue is based on what has been happening with this asset. This is extraordinarily overpriced. So if you were going to buy it, you should get a better deal. That's all. Here's gold. Look at this. I'm just going to move it right for you. Just notice I'm not changing anything. Okay, that's why I draw these lines for you. They're little love notes. This is what I teach you guys. Okay, after the day trading group and after the swing trading group, you get really, really good at leaving yourself love notes. Your new love language is going to be profit. Huh? I got your love language right here, baby. Yeah. All right. So anyways, gold heading up. Cool. So you have a bottom printed here. You got a top printed. As I've been teaching over and over and over and over and over, when you trap it, bulls buy the bottom or the break. So if you miss this, you're just not a bull or you're not trading properly. And then the next one is like that. Okay. Now you'll notice inside the trap, there are these micro moves right there. So you could have bought that. Okay. So there might be, right, a little micro move. And by that, I mean, I do expect this to occur as a bull, or if I'm a bull. But also you'll probably get one of these like in here to bring it up, and then it'll come back, and then it'll do that. So your choices are buy here, or buy here. Okay. He's like that one. Now the funny thing is, I got a ripped up bill over here too from 2 weeks ago. I haven't vacuumed. For shame, I got to vacuum my office. Don't you hate it when you clog up your Dyson vacuum cleaner with ripped up $100 bills? First world problems, right? So find a way. Yeah. All right, just farting around here with peso. Okay. Trap it. Okay, rand. And I ran so far away. Yeah, well, rand has third world problems. So, all right, let's bit of gobbledygoo going on here. Okay. So if you were looking at this from a bearish point of view, which I am, I can only sell on double tops or lower highs. Okay. Okay. Now I got this marked up. So this is an old trap. You can see this. If you're a bull, you buy here or you buy here. I'm not a bull. So now what I can do is I could sell this. This is legal, if you will, following the rules of engagement, because that's a lower high, lower low, lower high, lower low, lower high. Okay. I got my doubts if we can make lower lows quite yet. But nonetheless, you can engage here. You can engage. Yen, nice little move. If you're a bull, okay, you notice we have it trapped. You could conclude that this is a breakout, so this is your second move. Okay, remember, you can trade it here, you can trade it here. This is out of position, higher risk, but nonetheless, it can be tradable. But notice why I say it's got higher risk. It's really a late trade. This is how you get into a trade that you've missed. You're supposed to be buying here, but you can buy there. Okay? Okay? I like, right, Gisa says AJ Bull. Right. I liked it here. So like pissing around now at the right where you'd be challenged is just really, really, really late. Okay? Okay? This is where I would want you to trade. For example, monthly M2 on the first day of the month. This is what I teach. This is what I teach. I preach to teach, because some of you never had this. Number one, but born without a gun. I wasn't licensed to have one. Okay? That's what I teach. So now, like, here's your sort of second chance. Now you got it trapped. And now you're buying it up here. Like, you waited that long. That's where I'm scratching my head, where I'm like, okay. The minute you see me, fear me. I am the epitome, a public enemy, used, abused without clues. I refuse to blow a fuse. They even had me on the news. Yeah, 90s, baby. We had it good in the 90s. Yeah, I saw Public Enemy in concert. Yeah. It's good, man. Gisa, you're not allowed to speak to me unless spoken to, nor are you allowed to look me directly in the eyes. And if I bow, you have to bow lower. Bow down! Yeah. Yeah. And you have to refer to me as, O Master Prophet of Profit. Yes, O Master Prophet of Profit. Yeah. Americans are so funny. You should see the Canadians. Canadians are ripper funny. Yeah, the funny thing about a foreigner watching American TV, they'll say, wow, Americans are funny. All those funny people on American TV are Canadians. It's true. If they're funny on TV, 90% chance they're Canadian. Yeah. Yeah. Canadians move to America to do two things: become a comedian on TV or become a doctor. Yeah, start a medical practice. All right, so anyways, let's do our kitty cat. So who we got now? We got Jim Carrey, Michael J. Fox. Yeah, you can still, there's tons. You could probably list 100 people. And you're like, really? I thought they were American. Agisa, I would fire you if you were down 500 pips. So if anyone taught you that that's swing trading, is stupid. I know I shouldn't shame people. I'm not shaming you, but whoever taught you that swing trading means you can be down 500 pips, they're dumb. That's just dumb. Oh, not down. That's, oh, but still down 50%. It's just dumb. Okay? It's just, you can't do that. Well, $500 on a $1,000 position, it's just not smart. Yeah. There's better ways to do it, is all I'm trying to prove to you. Okay? Well, I don't care how much money you have. Right? Yeah, so you're saying like, so let's say I'm trading $1 million account. And what? I put down, what, $10,000 on a trade, and I should accept a $5,000 drawdown? I don't know about that. Anyways, yeah. All right, so anyways, what do we got here? Kitty cat double bottom. Roll reversal. So we call this a 1, 2, 3. 1 is the double bottom. 2 is the higher high. 3 is the roll reversal. This is the best pattern in the entire world. How would I trade a $1 million account? I'm teaching you how to trade a $1 million account right now. Okay. So, let's take a look at this. This is where a bull would buy. This is where a bear would sell. Okay? So the goal for a bull is to get the trade on, and then when you're approaching the zone, move your stop from here to here. Favorite currency, US dollar. Why? It's a reserve currency. It's the reserve currency. Cool. So, a bull would be looking for this. Nice. Now, I've told you that I'm a bull on yen pairs until the March Fed meeting. And then I will no longer be a bull. What? USD cross? It wouldn't matter, would it? Yeah, I dedicated a whole chapter in my book to answer that question. But it wouldn't matter. Who cares about the other side? It depends on the day, depends on the month, depends on the central banking policy of that second currency. Yeah, I don't care about the cross. Irrelevant. Okay? There's so many answers to that. Okay? But once again, irrelevant. If I believe the US the USD, the reserve currency of the world, is going to be strong this month or this quarter, then all I have to do is wake up in the morning and find something weak. That's it. That's all I have to do. Now I can do this fundamentally, or I can do this, right, based on relative strength. Fundy or techie, or both. Okay. HH says, Wayne, do you think USA can go into deflation in the next 2 years? No. Okay, how would you do that? Okay, you'd have to get potential GDP, and actual GDP. Okay. Okay, actual GDP, potential GDP, and we're here now, and you're suggesting we'd be down here in 2 years below potential GDP. No, I do not believe that, not for 1 second. Top 10 books. I haven't read 10 books on Forex. I might have read on Forex specifically. I don't know. One, maybe two. But I was already a professional by then. I just wanted to see what other people were doing, and they weren't doing anything special. So I'm like, Okay. Have you read Siddhartha by Hermann Hesse? Okay. Something like what I just wrote up. Siddhartha is a young Brahmin prince that goes into the world to find enlightenment. And when he finds it, he becomes Buddha. Is it a good book? It's a terrible book. That's why I recommended it. Gautama Buddha Gautama, yeah. Sure. All right, so that's the CAD, and it shouldn't be terribly strong unless oil recovers. Euro, overpriced. Aussie, I think kind of late. Maybe look at Beast. Did we do Beast already? Okay, I mean, here's the thing. I don't know. Here's the thing. I set this up for you yesterday. I think it was here at Forex.Today. Maybe it was the day trading group. I don't know. I'm at my charts so much, I have no idea what's going on, except it's just been handed out multiple times. But anyways, a breach of this, okay, like technically you'd expect that. So now that we're above, you draw the role reversal, which is me telling you to trap it, okay? And then what? down, no, I mean up, down, up. Cool. Now it's already happened and we're up here. Well, dude, I can't do it for you. So now what? So that's that. So maybe it makes a higher high, maybe it don't, none. But it retraced back to 156.00, kicking off the hourly 21, kicking off the role reversal on a breakout strategy. It's done. You're about an hour late. You might be, yeah, you're a solid hour late, maybe 2 hours late. So anyways. In the long run, 10-year will rise would increase or decrease the stock market. Decrease. It's just math. TT. Okay. There's so many ways of doing it. I've marked it for you many times, but you could do the present value is equal to the future value over 1 plus I to the n. Okay, so do the math. If you're saying I goes from 1 to 3, over one period, do the math. Okay? Now, typically what happens is something slightly different. You get present value is equal to the future value over 1 plus I to the n plus the future value over 1 plus I to the n plus future value over 1 plus I to the n plus the yes, and this is called finance. This is the flow of cash over time, cash flow. That's called finance, not economics. But don't worry, I have a formal education in finance, not just economics. You're welcome, by the way. Okay. So you're trying to say you're looking at a stock. Let's do this in black. You're looking at a stock and they say this stock is trading on 20 times earnings. So you would have to do this 20 times. N is equal to 20. So you would rewrite this in year 1, in year 2, in year 3, in year 4, and you'd have to go out 20 years. Now, over time, every year, you say the Fed's going to raise interest rates. Okay? And this year, interest rates are, let's say you did this last year, interest rates are 0. But then this year, interest rates are 1. Next year, interest rates are 2. And then out here, you'll say in year 4, interest rates will be 3%. Meanwhile, this company every year makes $1 billion profit. And what you'll see is every year, the present value of the $1 billion profit 4 years from now, when interest rates are 3%, is very significantly lower than it is here, where it's worth $1 billion. So, to answer the question, if you say inflation or the 10-year T-note or whatever you're popping in as I, that's the variable, okay, as it increases, the present value of this future cash flow is dropped. So therefore, the value of the company is down. And the reason why many companies came down 50% is because they were trading at like 28 times earnings based on money being free. So they had 0, 0, 0, 0, 0, and they were counting the $1 billion that they're going to make when your grandchildren are old, or your children are old, or you're old, whatever. So far out in the future. Hey man, Facebook 30 years from now is going to be worth $1 trillion. Because money is going to be free forever. Really? That's what you thought? Well, that's why it dropped from 400 to 250, because that was stupid. Okay? So I told you, I was telling you guys back in October about the rotation is coming. Rotation from growth to value, and rotation from the United States to global. Can anybody confirm that? September, October, I was talking about it. I was showing you I was already buying value stock. I was already buying banking stocks back last summer because this rotation was coming. And so if you're like, man, in November, Facebook was worth $400 and now it's 250. Well, dude, I told you before it was worth $400 that this kind of company was going to come down hard. So all you had to do is do what made sense. And you're like, well, Wayne, how did you come to that conclusion? Oh, I did the math. Okay? Okay? I have a degree from beautician school and cosmology school. Okay? It's not genius, it's basic math. Okay? If you don't like valuing, okay? Let's say you don't like this idea that the company is worth the company's value is based on the value of its future profits. Okay? Let's say you don't like that. Then you can look at the expected return of a stock is equal to, okay, the risk-free rate of return plus the beta of the stock that you're analyzing times the expected return for the market now. Remember, this is stock, this is market, so now you're looking at the entire market plus the risk-free rate of return. So you're saying the value of a particular stock. Remember, the top one is you're valuing that stock based on the present value of its future profits times how many years you think you want to do it for, whatever. Expected return of the stock is based on interest rates in the United States plus how sensitive is the stock to the S&P 500 minus the S&P 500, right? Wait, and I got this wrong because you have to look at opportunity cost, risk-free rate of return. So expected return of the stock market minus the risk-free rate of return, which is your opportunity cost. If that makes sense, you have to explain it that way, and then it makes sense. You're like, that's how I knew I wrote that down wrong. It's not plus, it's minus. Okay? So if the S&P 500 is going to go up 5% this year, why? That's what you think. Which means it's down. S&P 500 was down 10%, so you need a 15% rally to close 5% higher. Meanwhile, this is 2%. So right? So now you have to change all that and do the math and say now the real return for the stock market is going to be 3%. Okay? Now you got to change this to 2. Okay? Now, how sensitive is the stock to to the overall market. Now, beta is interesting. So if, like, let's say the S&P 500 goes up 1% today, but Apple goes up 2%, it's very, 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 very sensitive. It moves twice as much as the general market. So it has a high beta. Some stock, if the S&P 500 is up 1%, the stock is up about 1%. So the beta is equal to the market. It has neutral beta. And then some things like maybe a utility, the S&P 500 is up 1% and it's up 0.5%. But if the S&P 500 is down 1%, it's down 0.5%. So it has a very low beta. So it depends on how sensitive the stock is to the overall market, right? And you could plug in all these numbers and come up with the expected return for the stock. So you can do it either way. The thing is, most people don't do anything. The shoe shine boy gave you a stock tip. Okay. Okay. Veritas. Yeah, well, the truth through knowledge, right? That's what it is. And that's enlightening. Illuminati. So when I graduated from Harvard, they gave me a lamp, like illuminating, right? Illuminati. So I have a lamp upstairs. And I thought there was going to be a genie in it, right? But it was actually, that's funny, right? So I get this lamp. Look, you're Illuminati now. This is literally, they handed me a lamp. Congratulations, you're about to graduate. So I got my gown on, my regalia is on, and we're walking, right? We're setting up to walk in the procession to get to the old yard, Tertiary Square Theater. And anyway, so they hand out our lamps, and I'm like, oh my God, I'm an Illuminati, literally a lamp, right? And I remember looking inside that there was going to be a genie. You know what it was? An invitation to the Harvard Alumni Association for donations. I'm like, bitch, I haven't even graduated yet, and you're asking me for money? It was just funny. Yeah, boom, just like that. I'm like, it's real now. Yeah, it's real now. Congratulations. Welcome to Harvard Alumni Association. We accept donation. You know, I'm like, dude, I just made 5 years of donations, huh? Computer science. Yeah, that's the 1 year intro course, isn't it? Principles. Matrix. I think that's principles of computer science, if I recall. Yeah. Yeah, cool. All right. So anyways, so these are all done. These are all breakout strategies. Some of them are not that good. Some are better. So this is where your relative strength, your fundamental bias, like, do you buy into this one? No, I think I'd pass. But the pound yen one I set up yesterday, Euro's waking up here. I'm worried about this one because where it topped out. One of the things we talked about in the day trading group last night is if you do this trade, and yes, I said do. If you do this trade, the best you can hope for is 133. After that, it's risky. Probably too risky is what I'm saying. Okay. Any questions? So today we covered the balance of trade and its impact on the interbanking system globally. Okay. We went through a lot of dollar pairs, yen pairs. We looked at gold, oil, and Bitcoin. Very cool. Forex Pivot says, can you speak more on psychology? I can, but I haven't organized it into, a presentable methodology, if you will. But am I qualified to maybe write a book on trader psychology? Yeah, I think I put in enough years. But if you read my book from 15 years ago, there's a lot of psychology in it. Where I talk about how to really teach yourself how to trade properly, building trade plans and reviewing trade plans and keeping a journal. But what I say in the book is, I think I say something like this: 95% of traders don't keep a journal. And then the 95% of traders that keep a journal don't do it right. So therefore, there's a psychological aspect of keeping your journal correct in a way that teaches you how to trade. And I think I tell you, you could get 4 years of experience for every year you trade. 4x the experience. Peter says, will we have a counter trend trade in Ripple because we've reached the target early in the month? Well, that is the hypothesis. Yes, that is what it suggests. Yes, that there will be profit taking. It's not necessarily a counter trend, but it is profit taking. Yes, Solomon says that double bottom, higher high, higher low. Does the second double bottom have to be a higher high? Well, first of all, it doesn't have to be a double bottom. It's usually a one touch. So the pattern looks like this. Okay, here's a downtrend. And then what? Something unusual happens. It doesn't make a lower low. That's the first part. And then the second part is this. Okay? So, 1, okay, 2, and therefore you extrapolate that out in many different ways, and you got yourself a 3. Okay? 1 is the double bottom, 2 is the higher high, 3 is the entry. But this does not have to be a double bottom. So Oliver suggests someone's lecture series, but I think I could write a book, and it would be interesting actually, but I think I'd do it more as an older man. It's sort of like, there's other things well, first of all, I'm too busy, but it's interesting. It's an interesting topic. Okay. But my guess is it's no different than being an Olympic athlete, a concert pianist, okay, a successful business manager or business owner, or a trader. Right? Like, for example, I think if you told a normal person, whatever that is, that you would have to work 12 hours a day to be a successful Forex trader, they would balk. They're like, oh my God, that's so hard. But then if you go to a strip mall, let me pick a town in America, a strip mall in the suburbs of Las Vegas. And in this strip mall, there's this tiny little Vietnamese restaurant. And then you talk to the owner of that Vietnamese restaurant that they would have, if they traded Forex, they'd have to work 12 hours a day. And that would be a benefit to them. Like, really? I only have to work 12 hours a day? That's amazing. And I'm like, yeah, and you can have the weekends off. And it would sound like a dream job. Oh my God, that is easy. I have to work 12 hours. I only have to work 12 hours a day, and I get my weekends completely off. I can spend time with my family. I can go for walks in the park. Really? That's easy. It's too good to be true. So, same thing. I don't think an Olympic athlete, right, is lazy. I don't think a successful business person or small business owner is lazy. I don't think a concert pianist is lazy. I think a concert pianist plays piano every single day. One of the speeches I used to give about psychology, and maybe so this is a good tie-in, right? Phil Mickelson, the golfer, every single day would make 100 putts. And I think there were 5-footers or 6-footers. Okay, 6-foot putts. If he missed the 78th one, he would start over at 0. His goal every single morning, you just wake up, he's got a green probably right out his master bedroom, probably steps out in his pajamas, grabs a putter, and he makes 100 putts in a row every day. Discipline. Every day. Discipline. Every day. Now, here's the thing. Once or twice a year, he's in a position where he needs to make a 6-foot putt. And it's incredibly important. In fact, this putt is worth at least $1 million. But it might also mean, like a major tournament, the Hall of Fame. Okay. And you're like, Wayne, most tournaments you don't win $1 million. Well, actually, you probably would, but also endorsements and all that kind of stuff. Okay. But at least once or twice a year, he's in a situation where this 6-foot putt is worth $1 million. And actually things that are more important to him than $1 million, because he's got hundreds of millions, right? So it's really like he's trying to win another major. He's trying to get into the Hall of Fame. He's trying to land endorsements worth even more than the money. But he's got to make this putt. The thing is, if he didn't have that discipline to do the simple, basic task, making 100 putts in a row every single day, then what happens psychologically to a normal trader, or in this case, a golfer, is they say, don't miss. I'll screw it up. Maybe even again. They'll say, don't miss left. ... Don't miss left. And what happens is they miss it. They miss it again. Okay? They don't miss it left. Don't miss it left. They miss it right. They miss it. Phil Mickelson goes in and he says, I got this. Okay? I know how to make this. Okay? I'm a Hall of Famer. Okay? He says, get in the hole. Find your home. There's a big difference, isn't there? So, a long time ago, I had an extraordinarily bad period of trading. Every mistake I thought I was incapable of making anymore, I made. It was pretty surprising, actually. I remember being just flabbergasted when it happened. I just couldn't believe it, but it was like I just watched a car accident. I still remember clearly, just like I threw myself back. I'm like, oh my God, what am I doing? It was amazing. Just amazing how bad I was. And I knew all the rules and I broke all the rules. And when you're a trader and you lose confidence, you're dead. You're dead in the water. Okay. So I backed off. First of all, I told boot camp about it, right? Boot campers, I told them. I did a whole thing on it about discipline and confidence. And I told everybody the horrible mistake I made. I don't remember what my drawdown was, but it was not good. Okay? Not devastating, but really bad. Okay? So anyway, so I told everybody about it. Didn't want to hide, my shame. Instead, I wanted to use it as a means for strength. And then I said to everybody, look, the money is not a big deal. I can make the money back. The issue is I've lost confidence. Like, I thought I was not capable of these mistakes, and then all of a sudden, boom, they crept right in. So I said, what I need to do is rebuild my confidence. So I gave the putt speech, 100 putts a day. And I said, I'm going to do 25 OCOs. I'm not trying to make money. I'm trying to make putts. I think this is actually in one of the lessons in the training course. That I'm going to spend the next maybe couple of weeks, and I'm just going to make 25 OCOs. That's all I'm going to do. I'm not trying to make money. I'm going to prove to myself that I'm good. Good enough to sink the hole. That I'm, right? That I can do this. And I also swore to myself, I'll never make those mistakes again. And I have not. Okay. But I made the over and over and over again. 25, boom, 25, boom, 25, boom, 25. Did I do 100 in a row? No, that wasn't my goal. But I wanted to show that I have the patience and discipline to take good trades and just dunk it again, dunk it again. Yeah, sure, I lowered the bar so it's only, 8 feet high instead of 10 feet high. But the point is, lots and lots of easy 6-footers. 25, 25, 25. Another 25. Give me another 25. No, I'm not letting winners run. No, I'm not compounding. No, I'm not going to get rich doing this. But I'm going to rebuild my confidence. And that's what I did. So there's speak a little bit about trader psychology. There's maybe one chapter of the book. I don't know. So peace on earth. May the pips be with you. May your profits be above average. I invite you to join FX Bootcamp. It's $88 a year. The second thing is I invite you to visit tradersway.com and open up a demo account and give them an opportunity to earn your loyalty and respect. If you're in my day trading group, I will see you 7 p.m. today for the Asia Open trading session. And if you're in my day trading group, remember you meet with Ryan at 2 o'clock in the morning for the European session trading. So again, peace on earth. May the pips be with you. May your profits be above average. Have a wonderful day. Thank you for being on my team and in this community.